Hey, what's going on, guys? Welcome back to my channel. In this video, I'm going to be talking about the current SPAC market. Going to mix it up from my usual market recaps and just talk about SPACs specifically. They've obviously been getting crushed. Unless you live under a rock, then you may not be aware. But this is an article by Barron's calling it SPAC-ageddon. SPAC-ageddon is here or maybe not. Either way, investors beware. And obviously, like if you talk to people that have been investing in SPACs, they're obviously feeling the pain. And it's pretty much across the board, right? It's not just one or two, it's usually like by the dozen. Let's take a look at some of them. So if I just Google SPACs, we look at Virgin Galactic, ticker symbol SPCE. We have Nikola, we have Churchill Capital, which is CCIV, which is practically Lucid Motors. Pershing Square Tauntaun, ticker symbol PSTH. Open Doors, another popular one. Fisker is another popular one. And then Social Capital, Chamath SPAC. A couple of Chamath SPACs. So yeah, all across the board, as I mentioned. And so yeah, this is another YouTube video covering SPACs. Really, the main thing I want to cover also in the beginning is that the broader markets are not getting hit nearly as hard as small caps right now. So honestly, it goes a little bit beyond SPACs. I could think of some smaller stocks, maybe under 10 billion market cap, that are getting hit pretty hard. But just for some context, let's take a look at the NASDAQ. So it's not really down too much today. I think it's only down like 1% or so. Yeah, it's about 1.26%. If we take a look at the Russell 2000, so that's definitely been lagging relative to the SP 500, relative to the NASDAQ and the Dow Jones. So obviously it wasn't able to make a higher high. But you can't really blame the Russell for that. It made like this insane run ever since November, which obviously a lot of other stocks did too. But this is just like next level. And so now the Russell is having some kind of bearish divergence relative to the other indices. And obviously today was a pretty bloody day. This is a Reddit post made on the Robinhood subreddit. So a user said, "What's been going on with the stock market for the past 3 months?" He said, "Jesus Christ, I'm hemorrhaging hundreds of dollars every day. A good day is when I'm up $20. What happened since mid-Feb to trigger this massive downturn? I have a very diverse portfolio, and on any given day, 90% is in the red. I've never seen it this bad." So first of all, why I love this post is basically for the teaching opportunity, because we get a lot of context out of this post without actually it being explicit. So what do I mean by that? So hundreds of dollars every day is what he's losing. A good day is when he's up about $20. Obviously, you're dealing with a small account, right? A lot of folks that have small accounts usually want to 10x their portfolios. What happened since mid-February to trigger this downturn? What that says to me is this guy is most likely a very stereotypical retail investor. Folks that think that every single market movement has to happen because of some news or some nuanced reason, right? Not really acknowledging that, hey, sometimes stocks go up, sometimes stocks go down, sometimes there's sector rotation. There may be some very deep underlying reasons, but they're usually not obvious, not in the way that the media makes it. The media makes it seem like they always know what's going on. The market does this because of inflation, the market does that because of interest rates, blah, blah, blah. I don't think the media really knows what they claim they do, but obviously they have to keep up that charade so that we can keep clicking on their websites and clicking on their channels. But yeah, that's sort of the mindset that a lot of folks have, is that this has to have happened because of some nuanced reason, where it could just have happened because billions of dollars pass hands all the time in the stock market. And some stuff is going to happen, right? Some stuff is going to go up, some stuff is going to go down. The last comment, which is, I have a very diverse portfolio, and on any given day, 90% is in the red. So the diverse portfolio part, I find really interesting because obviously, as we mentioned, a lot of large cap stocks are not getting hit nearly as hard as the small caps. And so another signal that this person is a retail investor is a lot of folks sort of misjudge how diversified they are, because the only stocks that a lot of folks consider are these sort of small cap stocks. And I hope this doesn't come off as too preachy. I'm not trying to shame anybody or this guy. I'm just sort of, I think this was a perfect mirror or window into what it's like to be a retail investor that's investing in SPACs. So why don't we go ahead and actually start talking about some SPACs. So Pershing Square is a SPAC that obviously got crushed, up from a high of about $34 down to about $23, which actually is not too far away from where it opened here. on September 11th, where it was about $21. And so this is an example of a stock that we could get into, that's actually near it's basically its open price. And so this theme is pretty common, right? A lot of SPACs are starting to retrace sort of towards their opening price. Let's go ahead and take a look at CCIV, for example, Lucid Motors. So Lucid Motors basically had the support area that it bounced off of a few times, but it's definitely losing it right now. From a technical perspective, it's not really my favorite. And just for some commentary, some folks have called Lucid Motors the next Tesla. I'm not even like a big Tesla fanatic, and I kind of have to scoff at comments like that. First of all, number one, why does every single electric company have to be the next Tesla? Number two, it's very, very difficult to become the next Tesla. Like, that's really like, we should take that title a lot more seriously than I think we do, right? It's not just, oh, they're an electric vehicle maker, they're the next Tesla. Like, no, like the next Tesla, Tesla's, one of the most impactful companies, one of the most successful companies of my generation. So we need to take that title a little bit more seriously. That being said, I'm not saying like don't invest in CCIV or Lucid. Like, obviously, if this starts to creep down lower, it might be worth it to start nibbling on it. But the way I want to finish this video is by talking about two SPACs that I'm actually buying and I actually really like. So let's go ahead and take a look at the first one, which is Skillz Inc. So similar to Pershing, ticker symbol PSTH. So Skillz Inc. is currently at about $12 a share. It opened here at about $10 per share. And so it recently made a run up all the way to about $45 per share. And now is currently at about 12, as I mentioned. So that's a decrease of about 73%, which is actually pretty nuts. I'm starting to nibble. Into Skillz, and it's kind of hard not to. Let's go ahead and actually take a look at what Skillz is. So it turns out Wikipedia actually has an amazing description of what Skillz Inc. is. So they're basically an online mobile multiplayer competition platform, compatible for both iOS and Android. So they basically integrate to already existing games. Players use it to compete in competitions against other players across the world. This actually undersells a little bit because one of the biggest appeals is the opportunity to actually make money using Skillz as platform. So Skillz helps developers build multi-million-dollar franchises. So basically, this helps the actual games themselves by enabling social competition within their games. So there's games that already exist, and Skillz provides a social platform to compete with one another. And Skillz is actually pretty large. They host tons and tons, well, actually billions specifically, of casual esports tournaments for millions of mobile players worldwide, and they distribute millions in prizes each month. Long story short, if you're bullish on gaming, if you're bullish on making money off games, if you're bullish on social compatibility with games, then I think you would like a company like Skillz. And moving on to their revenue numbers, so basically in 2017 they pulled in about $17 million, so no growth for that year because that's the first year, and so their growth into 2018 was about 200%, $51 million, then $120 million after that, and then after that you can see projected revenue growth, and so revenue growth is actually projected to slow down up in the 50s. That's actually still really good for any company to grow revenues by 50%. It just so happens that Skillz is sort of in a hyper growth phase, which is actually what makes it a really cool opportunity. I think it's pretty fair to say that on this current trajectory, Skillz is going to be bringing in $1 billion in revenue sometime over the next 3 or 4 years. And yeah, that's part of the appeal about a company like Skillz in the hyper growth phase. Moving on to the next company, which is Highland. So Highland is getting destroyed. I can't think of a word to describe this phenomenon. The word I'm thinking of rhymes with hilarious, and it starts with an H. I mean, this is just ridiculous. And honestly, with a lot of the other SPACs, it almost seems like they kind of took out the trash themselves. I never had a chance to use that phrase, but it's basically like the trash taking itself out. Now, I understand that may seem a little bit harsh. What do I actually mean by that? So I'm not saying these SPACs are bad companies. I'm not saying that SPAC investors are inherently bad or anything like that. What I am saying is that there was a lot of easy money made during the run-ups of these SPACs, and obviously ended up not being very sustainable, because a lot of those same investors that sort of got in because of the hype are now getting punished quite severely, right? Because let's take Hylian for example. If you started to average down, let's say even since like 30, right, it'd get very, very difficult to have a decent average cost if you've been buying since 30. Again, I'm not trying to make anyone feel bad or anything like that. That's just like how it is. And so Highland at $8.27 is super, super enticing, and so I'm starting to nibble on Hylian. And I don't know how much I talked about this yet, but basically, this actually reminds me of Lucid CCIV, because um, basically we had this area of support that once Hylian lost, it looks like we tried to get back above it, got rejected, and then sort of just went down the pits. Um, and we can see this like bear flag sideways consolidation before continuing lower. So yeah, I'm definitely starting to scoop up shares of Highland right now. Let me just explain what Highland is in my own words. All right, so Highland is basically set out to revolutionize the trucking industry. They're trying to make the trucking industry more fuel efficient and cleaner as far as energy goes. So basically, they're not trying to reinvent the wheel here, pun intended. They're not trying to reinvent the wheel by creating their own trucks or replacing truck brands, but they're actually working on replacing the engine and the fuel sources that these trucks actually use to carry their loads all across the country. And so there's different stages of technology that Hylian's actually working on. They eventually want to go towards hydrogen. At the moment, they're working on a natural gas powered battery. And so the reason why that's actually really cool is because, for example, if you wanted to use an electric vehicle to ship really heavy loads all across the country, it'd become really difficult because batteries are actually pretty heavy. But in this way, they're, instead of actually bringing the batteries, they're bringing the generator that actually powers the batteries. And so that generator is actually a natural gas generator to power a battery that goes inside the engine that actually powers up the truck. And so I know it's kind of a mouthful, but basically the point here is that they're trying to enhance the trucks, not create their own trucks or replace the trucks. And the reason why that's also important is because a lot of truck drivers actually really love their trucks. They love their brands. And basically, Highland does not want to replace or basically alter the user experience of the drive too much. And so it's basically working with what they have. And the actual total addressable markets of this industry is in the hundreds of billions of dollars. That's also what's really cool about this. And obviously, like if Highland really nails, this in the short term, then it's possible that they can actually use this use case for other industries as well. So upside is actually really good in the short term and the long term, and I kind of like Hylian at these prices. It's like, yeah, why not? So I'm starting to get into Hylian. That's going to wrap it up for this video. Let me know what you guys think. Yeah, basically we talked about the SPAC market, and I gave 2 stocks that I actually like and am buying right now. I know I kind of, made fun of CCIV, Lucid Motors. I'm actually buying a little bit of Lucid, but not really too much. But yeah, anyway, that's going to wrap it up. Let me know what you guys think, and I'll see you guys in the next video.